In this video, I want to explain you why the 2nd of April could be a game changer for the economy. I'm quite passionate about this subject, especially because I have a master in economics and a master in international economic policy. So yeah, let's say that I'm quite passionate about economics itself. So passionate that I want to explain you why those four things are going to have like such a big impact on the economy. What are tariffs? Those are taxes imposed on imported goods, and on the paper raise government revenue, protect domestic industries. Looks kind of good, right? Well, let's say that is not so good as it seems like, because basically this increases the cost of imported goods, which creates inefficiencies and therewith losses in the economy. If I was importing a good at 10 and I was selling at 15, and now I have to pay 15 to get that good as the producer, then of course I'm not going to sell it at 15 to the consumer, but I'm going to sell it at 20 or even higher. Let's say the main thing that tariffs act on could like actually shield domestic producers from foreign competition. So this could have like quite a positive impact on like enforcing a little bit and helping the domestic production, but often at a higher overall cost. Why? Because basically this has a big impact on the consumers, because businesses typically pass the tariff costs on the consumers, as I was saying. So this means that basically the consumers are going to have a reduce in purchasing power, which is never a good thing, since this administration is imposing a lot of tariffs both to Canada and Mexico, to China, to Europe, to Venezuela, to a lot of goods, but also, let's say, a lot of things. And more than often, the countries respond by imposing tariffs as well. So let's say that it's never a win-win situation. It could be a win maybe in really the short run, but in the long run, this is gonna be bad for the economy, actually. So this could actually lead to the second major thing, which is an increase in the prices, which is basically the inflation. Let's say that normally inflation is not a bad thing, especially if it's like in manageable terms at 1%, 2%, 2.5%. But if inflation starts to increase suddenly, fast, a lot, that's never a good thing. So looking at the inflation rate right now, even though it's at almost 2.5%, this is a value that we have it from some months ago. So it's not the actual precise one, because like it's really difficult to track the precise index, the precise inflation. But at the same time, we can see that slowly inflation started to bump up a little bit time from time. Especially by looking at the data from February 2025, we can see that inflation on all items and food, basically excluding for energy, it got almost to 3%, which is a little bit too much for like the usual increase. And this is never a good thing, because basically the impact of inflation is once again reducing the purchasing power of the consumers, but also increasing the cost of living. So let's say from one side there are tariffs, which are definitely going to increase the prices. Those prices are going to increase, but normal prices will increase, but with those things are going to increase even more. And this is basically going to have an impact on the consumers, because if I, as a consumer, I know that prices are going to increase, but I know that prices are going to increase even more because like someone is doing something that makes prices increase even faster, then I start to lose confidence in the whole economic system. And this is basically the subject of my master thesis, which I worked 6 months for. So let's say that I'm quite confident about it. Haha, funny. But definitely, basically, consumer confidence is how people perceive the whole economic situation, which can be optimistic, which means that the economic situation is good and it's favorable to make investments, to buy things, or if it's bad, which means that if it's bad, people start to not spend and they start to save a lot. And if they save a lot and they don't spend, then the economic situation is going to slow down. And if it slows down, then people are going to be like, oh, it means that maybe I should actually save even more because like things are not going so well. So this is going to have a reinforcing effect, and things are going to get downhill a lot. And we can see that already from like those two news, that from one side it says that consumer confidence measure plunges to lowest in 12 years. Meanwhile, if we look at the Michigan Index of Consumer Sentiment, it shows that consumer confidence is actually decreasing a little bit, like more than it should have, let's say. So this is never a good sign. So especially from all the papers that I've been reading about consumer confidence, it can be intended as a spending behavior, an economic mood, let's say, almost like if people feel that things are going to go well, then they're likely to invest, to spend a lot. And by investing and spending a lot, this basically moves the whole economy. But if I start to slow down, then my neighbor is going to slow down, the whole community is going to slow down, the whole country is going to slow down, then that's not going to be good, let's say, for the overall system. So definitely, let's say that consumer confidence is a really, really important factor to take track into consideration. And now, by asking ourselves, what if the tariffs are gonna go up, so prices can increase. So, but what if prices are gonna increase, but are gonna increase more than they should have? And what if I'm gonna be a little bit uncertain about the situation of like what's gonna happen in the economic system? Well, at this point, we have the main protagonist, the main actor that has to kind of solve the situation, which is the central bank. So even though a lot of people, and especially a lot of my colleagues on YouTube, they say that the Fed, what it's doing is not good, the central bank and things like that, almost all the academic papers that I've been reading for my master dissertation, they're saying that especially in terms of uncertainty, but also when the central banks intervenes, like they show the fact that they care about the economic situation and they act in a way, that thing is perceived really well by the people, by the consumers, which feel that since the bank has stepped in, the central bank has stepped in by doing an action on the interest rates, then people feel more, let's say, kind of safe to do things. And let's say that this is going to be the main thing on April, on the 2nd. At the moment, the interest rate is at 4.5%, which is quite, let's say, a rate to kind of like lower down the inflation that was like really, really high some years ago. Changing interest rates, it's super complicated, it's super delicate because you have to take into account inflation, unemployment, GDP, a lot of things. Those are like just the main things that are like taken into consideration, but they're like a lot of things. And now the Fed has 3 things that they can do, which in my opinion, they're not going to be 3, but they're going to be 2. Mostly because if they increase the interest rate, this will signal the fact that they want to lower the amount of money in this position in the economy, which could actually maybe not be a good thing for the economic situation when all the people, they are afraid that things are not going to go so well. So maybe that's not going to be the path, the most probable path. But in my opinion, what could happen is either they lower or they keep the same interest rate. And let's go with the least probable, in my opinion. Of course, I don't have not even a tiny fraction of knowledge or expertise of the people working in the central bank. That would be a dream, but definitely just having like a little bit of perspective. If they keep the rates at the same level, they give the signal that okay, the economic situation is doing quite well, talking especially in the employment rate, and the fact that definitely consumer confidence is lowering a little bit, but we believe that since there are like a lot of people working, there's not so many layoffs, and things are actually going good, then at this point it's good to keep the same level of interest rates. But in my opinion, since there are like so many factors that are going to happen, a lot of them like really suddenly, then talking about tariffs, talking about like the economic situation, talking about the consumer confidence and all the other factors, maybe they might want to actually lower a little bit the interest rates, maybe go to 4.25 or something like that, to actually give a signal to the whole economy being like, we know that things might get harder, we know that prices might increase, so at this point we're going to actually lower the interest rates to actually help you with the amount of money available in the economy. So actually help industries invest more, so employ people, make people feel better, because like people see that a strong intervention by the Fed, it's actually a good sign, this according to the many papers. So that could be a thing that could happen. But definitely everything, it's related, let's say, a little bit to how also the economy is going. And since the Trump administration, things have been not going so well. Like just looking a little bit at some of the key biggest players in the economy, we can see that a lot of them had quite big, let's say, downfalls, kind of, let's say quite decreases. Looking at Microsoft, Nvidia, Apple, Amazon, Tesla minus 35% from the moment that Donald Trump got elected. So definitely there are like a lot of things, and according to what's going to happen on the 2nd of April, the market could react in many ways. And definitely a way to be, let's say, careful about it is to look at the index funds, to look at the funds that have like many, let's say, companies inside, because there is a lot of red, but there is also some green as well, like some good ones, some companies that actually gain some. But like still, it's a moment where we need to be a little bit careful, and definitely it's a moment when things are gonna start to move towards a direction or another. So yeah, that's why the 2nd of April is gonna be a game changer for the economy. So I want to say thank you so much for watching. I appreciate it a lot that you watched the video until the end, and definitely it's gonna be a momentum, and that's why I want to thank you so much. Thank you so much for watching. I appreciate it a lot. And yeah, that's kind of the whole video. And definitely it's going to be something really interesting, because on the 2nd, a lot of things are going to happen. Like there's going to be some movement, definitely. So yeah, hope things are going to go well. And I'm going to see you at the next one.